Nasty move on Bitcoin yesterday, and lots of people asking me, will it go lower? Let's talk about it. What's happened so far is that price has done a full recovery of the last market maker candle. Now notice here how, because it was such a big strong move, that when price got back to that area, it was able to make a big strong move as well. That means that this whole area between about 22.8 to about 21.250 is still unbalanced. Until price starts to creep up through this area, we won't rebalance the zone, which means every time price gets there, it's going to shoot up and then shoot back, shoot up, shoot back until we get that little consolidation in that area. So then keeping that in mind, if we stick to the 4 hour, when you look left, you can see below price, there are no more of these candles yet to be recovered all the way back to the 18K region. That means we have to go to a lower time frame to see if we can find them. So in the 1 hour time frame, we've got a very small portion of this one left, which is the exact area that the price is currently just bounced off. That's price currently. So that one's at 20,600. Then we have this bigger area down, which is at 20,400 to just under 20K at 19,888. And then finally, we have this area from the 13th of June at 19.44 to about 18.9. Whoops, my bad. There's one more from the 19th of June between 18.1 to 17.5, which was obviously the last big drop. Now, how far we drop is not the concern right now. The concern right now is all of this leverage that's in the market. You can see, obviously, people have gone short. We've got 31 billion leverage in the market, but there's really not many long positions open, which means in order for the market makers to grab liquidity, they're going to have to issue some fake moves to the upside to build on their contracts before they can send it down further, if that's what they want to do. So these circles here are the bigger concern, because this is showing us that people have gone short basically at the very end of the very big move down. And so only a small spike up will wipe these people out, giving the market maker the liquidity they need to then continue price down lower. So then the next step is to match these circles up with the red vector candles from the recent drop. We can see here that 25x leverage traders will get liquidated at 22,240. And 100x traders will get done at 21,590. So let's see if there's a candle in that zone. And what do you know, on the 15-minute time frame, we have this one here between 21,200 to 22,730. And I taught you in a previous video how to mark out your targets based on these candles. Be sure to go back and watch it. So now, if price were to retrace to the 50% area at around 21,970, that will wipe out the short traders who recently went short on 50 and 100x. Then if they decided to recover that entire candle, it would also wipe out the 25x traders. That gives the market maker the next load of contracts that they need to then send price lower. Ideally, you want these lines to also line up with EMAs, which means by the time price does get up there, it's probably going to meet this 200 EMA, and I'll be looking for rejection there. That's what's going to give me the idea that this is definitely going down further. If it breaks it, I reassess up here at 22,730. Real trends don't change on a weekend. Keep that in mind. So don't think the bottom is in and it's time to buy on a weekend. If the bottom is in, we will know that during the week.